Welcome back to Futures with Lichtenstein and Hinks. I'd like to welcome in Alan Nuckman, the Chief Market Strategist at Agora Financial. He's here to talk currencies with us this morning. Alan, thanks for coming on the show here today. I'm watching here, guys. We've got the dollar on the move here. We've seen it up through 91, up through the 92 even area. It's a counter-trend move, but it certainly has seen some follow-through.
Yeah, but I'm not convinced just yet. This may be a fake-out breakout. Now, bring it back to the financials here. What we saw last week was we saw the 10-year note finally get to that 3% level, but net on a weekly basis, the 10-year was essentially unchanged. So it wasn't a significant breakout or follow-through there. And I don't know. Let's see what happens with this euro currency. If it can hold the 120 level, I think the storm may be over in that dollar index.
Good morning, Alan. You know, what I saw from this move up to 3% in 10-year yields and the corresponding U.S. dollar move, you know, from my days trading futures, I always look at open interest and when positions get weighted. And it may, do you think there could be an exaggeration in this dollar rally because of there was a significant amount of shorts in the U.S. dollar?
Yes. Yeah, you got it. I think that was partially a short squeeze. So whenever you see that squeeze, it's important to see how the follow-through, you know, what kind of action we get after that initial squeeze. So yes, we've been trading between 88 and 90 for a while. So that target's 92. We got to the 92 level on that breakout, but let's see where we are in the next coming weeks. But I'm not convinced that the dollar decline is over. You know, I would concede that we're pretty range bound, like we talked about in the 10-year. The 10-year had been in a 1-point range for many weeks. And in the big picture, we've got the S&P, even though we're getting some bouncing around and a nice comeback again yesterday. But the S&P is between 2,600 and 2,800 since November. So, you know, a lot of markets are tracking sideways. Not to say there's not opportunities in the short term, but in the big picture, we're range bound.
Yeah, Alan, I want to talk a little bit about the pound because with the bid coming back into the dollar, we've seen the pound come off quite a bit. How much of it do you think is the dollar? How much of it is some concerns about Brexit? And we also got some weak data out of the UK last week, GDP and their PMI numbers yesterday for the most part. How much do you think is that weak eco data that we've been getting?
Well, I also saw that the European stock market has bounced back. It's at a couple week highs. So, you know, you're seeing a little bit of normalization there. As far as Brexit goes, you know, in my mind, that's kind of a done deal when the markets move forward. I didn't notice anything significant in the pound. You know, like I said, I was surprised by the euro. The euro had traded between 122 and 125 for the longest time and has broken to the downside. So let's see if it can hold at 120. But to look at some of the other currency markets, the yen, for example, has had a pretty healthy unwind here over the last couple of months as well. You know, that's gotten my attention, I think, more so than the pound. That there just seems to be there had seemed to be a positive tone in the yen and that breakout to the upside, but it's given all that back and more.
Alan, as you know, I'm not a technical trader, but even I have to look at these charts and say there's some ugly pictures in some of these currencies that have really backed off, not only in the yen and the euro, but how about gold and its drop? I thought it was going to have a 12 handle for a while there yesterday. Now it's up fractionally this morning because we have a slightly weaker dollar, but some of these charts do not look pretty and they need this dollar to stop going up, correct?
Well, yeah, I've said this a couple thousand times to you guys before. It's all about the dollar, right. And you could see gold got knocked down hard last week. And one thing that I did take out of last week's action with that dollar surge, we're up at 3.5-month highs, is that oil wasn't impacted at all. Yeah. That shows the internals are very, very strong, and we're still hanging around that 67, 68 level, even with some somewhat negative data, and the dollar is a huge headwind against oil in the last couple of weeks, hasn't done any damage. So sometimes you get a disconnect, but gold is given back, you know, all that positive action that it had. Again, range bound between 1,300 and 1,350, let's say 1,370 there. I want to talk a little bit about rates, and I want to talk about, like Kevin says, you know, not necessarily about the price action, even though I'm a price guy, and I think the markets know mostly everything, and you've got to be confident that the market's got it right. But to get into something like rates, now we've got the Fed again today. We're going to get a couple more rate hikes this year. Yeah, that's a done deal. That's to be expected. You got to remember, we're in a 106-month economic expansion, the second largest expansion in history. We just tied that record. So, it is overdue that rates come off of the complete bottom. But in real terms, in everyday terms that we deal with, I was just looking in the paper, and they have that list of CD rates. You can get a CD for a year. It's going to give you a 2% payoff. If you get a CD for 2.5 years, it's 2.25% payoff. And you can see that same action in the futures markets in the distant months, that after this year, things are completely flat.
Yeah.
So the market's not expecting this rate hikes to continue. It's just this year, and then it's just stays the same, and it's reflected in the bank's payout to someone that's going to invest their money in a CD. I don't know if that's a good advice to put your money in a 2-year CD or whatever for 2%, but we're not seeing any rate hikes continue after this year.
Yeah, we've been talking about how the longer end of the yield curve just isn't buying into this concern in terms of inflated inflation. But I'm curious, you mentioned briefly that we have the Fed today. Any movement you expect to see, any movement in the dollar today in reaction to the Fed meeting?
No, but I am going to use Kevin's phrase, bingo. The Fed bingo. You just the words and maybe which order they put them in, and it's word jumble and bingo at this time. Which words they put first or last, and so it's just a giant game. But it's that's why we play. It's fun. I don't think it's going to have any impact on the market. What I've noticed here in the last couple of weeks is, more importantly is how the market, instead of how they've reacted, but how it hasn't reacted, is the bounce back that we've seen in stocks. Last week, same thing, big sell-off, tested those lows, rejected those bounced on on Thursday. This week, yesterday, we were down hard yesterday, reverse course once again. So I think the market's showing amazing resiliency when you talk about the macro market, looking at the stock market, because everybody looks over the shoulder, sees how the stock market's doing regardless of what you're trading. I think that's a healthy sign. We've had a series of higher lows and lower highs, so we'll have to wait and see. But That's a price pattern here, looking for some sort of a breakout. And I'm still confident this overall trend is positive, and I think that could carry everybody higher.
Oh, great, Alan. Someone out there is copywriting FOMC bingo right now as we speak. By the time I get off the air, it'll be gone. Anyway, here's what I want to talk about, though.
Shirts.
Here's what I want to talk about. The Fed minutes that were released a few weeks ago from the meeting in March were some of the most hawkish Fed minutes that I've seen in recent memory. Should we be braced or expecting a little more hawkish tone coming out of these comments and the foregoing and the next meeting, which is June 12th and 13th? Is Jerome Powell, do you feel, in your opinion, setting a new tone of hawkishness for Fed comments?
Well, tone and hawkishness are different from the action.
Sure.
So I'm an action guy. I'm a results guy. So we'll have to wait and see. But I would say that's the world we live in now. Look at the politics and the policy out of Washington every single day. There's some sort of bluster and hawkishness to everything. But what's the reality of it? I mean, look at the example with the aluminum and steel tariffs. They're giving them another extension and another extension. We get a lot more tough talk than real action. So we'll have to wait and see. But again, coming back to the markets don't believe that this is going to be a straight up move in rates, and I don't believe it either just yet. But it's going to happen. We're still a long, long ways away from having to make that choice between stocks and treasuries as in that chase for yield. And in addition to, what you're getting in performance on the S&P on a yearly basis, the dividend yield is still significant. Corporations had an amazing quarter. Nobody's appreciating it right now. The market's not appreciating, and the market reaction has been muted and dull for whatever reason. I think we're just spoiled over the market action over the past 5 years or so. People aren't just embracing or believing how well corporations are doing. I mean, to get back to Apple. Apple, what'd they make? $11 billion in profit for the quarter, over $9 billion this same quarter last year? That's profit for the quarter. It's just amazing. And again, to get back to the markets, the options market had priced in a 4.5% measured move based upon the at-the-money option straddle. So the markets knew that there was going to be a 4.5% move. That's exactly what we've seen. Now, The problem is it didn't tell us whether it's going to be up or down, and that's half the battle, obviously.
Right, and then the next question is, do we get some follow-through and reaction too? But Alan, thanks for coming on this morning. Really appreciate you sharing your thoughts with us and getting us ready here for the
guys.
Fed meeting this morning.
Bingo.
All right. That's Alan Nuckman from Agora Financial. And when we're talking about the dollar on the move, chances are you're talking about the treasuries on the move. And in this case, they have been.